Hey everyone, I'm Josh Albayero, or you can call me Josh the Tax Guy. And today I want to come to you with episode number 2 of my podcast. And I want to talk to you about the child tax credit. This won't be long. I'm not here to teach you to be a tax professional. I'm here to make you aware of certain things that you need to know as you go and enter your information into IOOGO tax and file your taxes in minutes, or you do take those documents to a tax pro and you let them enter that information in the system. So let's get to it. We're talking about the child tax credit, a $2,000 credit. As you can see it right there, $2,000. And the biggest misconception, let's start there. The biggest misconception is that the full amount will show up in your refund deposit or your refund check. And that's not how it works. This is what you need to understand. Number one, all credits. You think about the word credit. Credits are meant to help you pay down taxes. That's the first thing that a credit is it's there for. If at the end of the year, when you put your information into the system or you go to a tax pro and you owe taxes, then that credit is going to apply itself to the taxes you owe and it will reduce it. Now, with some credits, if you have taxes that you owe and the credit applies itself and there's some left over, then they'll refund that to you. So that's how the child tax credit works. An example, let's say that you owe $1,500 at the end of the year, that during the year you did not pay taxes correctly and you end up owing the IRS $1,500. So here you go. You have one child that's a qualifying child. You have $2,000. So what's going to happen is that qualified $2,000 is going to be applied to the $1,500 you owe, and there's $500 left over. Let's go to the next part. You only get up to $1,400 as part of your refund. What does that mean? Let's say that you are that good taxpayer, that person who pays the max amount during the year. So you owe nothing at the end of the year. So you are supposed to pay $5,000 in taxes throughout the year, and you pay $5,000 throughout the year, or probably a little more. So you owe nothing during your tax preparation. So what's going to happen is that out of the $2,000 credit, the IRS says that only $1,400 is refundable. So the other $600 disappears. The IRS keeps it. And so I want you to understand that only up to $1,400 is refundable per child. So if you have 3 kids that qualify for the credit, you can get $4,200 added to your refund. It's still not a bad deal. Right, let's move on. Very important here, because this is a confusing part for a lot of people, and it's because when the child turns 17, your children, your kid, your son, your daughter, your granddaughter, your niece, nephew, whoever it is that you are claiming as a legal dependent, whenever they turn 17, you can kiss this credit goodbye. Why? Because the law says so. Whenever this child turns 17, the credit will no longer apply. So it doesn't matter if you go to Simple Tax, Happy Tax, IOOGO tax, the law is going to read 17, no more credit. So that it's simple as this. As simple as that. So be very careful, because sometimes parents will know that, you know what, I have a kid and my kid gets me, certain amount of credits. Because of my kid, I get a lot of credits throughout the year. Well, that kid's going to start growing up, and when they turn 17, credit goes away. If you did not make changes to your paycheck and how you pay taxes throughout the year, you're going to find yourself with a big surprise. Now, you're asking yourself, hey, well, what about is he still my dependent? Is she or he still my dependent? Of course, you can still claim this person as a dependent until they turn 18, and you just won't get the credit. Not this credit. You'll get something called other credit, other dependent credit, which is only $500, and it's non-refundable. What about if the kid's a student? All right, so if the kid is a student and he's going to college, university, and it's enrolled and you can prove with that form 1098T that you're paying, that you're enrolled in a 4-year college, then you can claim this kid as your dependent until they turn 24. The moment they turn 24, the system is going to start asking you other questions like, why are you claiming this 24-year-old? Is he disabled? What happened to him that you're still claiming this person as a dependent, right? So don't get fooled. Don't get fooled. A lot of what happens to a lot of people is that they go to a tax preparer, and the tax preparer is going to make money. So instead of helping you understand the law, what they do is they enter this information into the system. So you come in with your 18-year-old kid or 19-year-old kid, still lives at home, but the law says that he's no longer your dependent. And because of that, the system is not going to calculate any credits for you. So remember that it's not up to us. It's not up to me as a tax expert. It's not up to your tax preparer. It's not up to your CPA. It's up to the law. So whenever I tell the system that your kid is 19 and the system calculates the law and says, okay, 19 years old, not in school, the law says zero child tax credit. So here you go. You have $500 as a non-refundable credit to pay for taxes you owe. And then the system says, wait, but you don't owe any taxes. So guess what? You don't get anything. So, but the name of the dependent will show up on the tax return. It's not producing anything, but it will show up on the tax return. The kid that you are claiming, it has to be your dependent. So let's just clarify who is a dependent. Someone who is a dependent, if you're going to claim someone as a dependent, is because you pay 50% of more of yearly expenses. All right, 50% of more or more of the yearly expenses for that kid, for that dependent, right? It doesn't matter if it's your little brother, if it's your nephew, your niece, your son, your daughter, your granddaughter, stepchildren, foster children. It doesn't matter. As long as they are under 17 and you pay 50% or more of the living expenses and he lives with you for more than half of the year, then you can claim this person as a dependent. Now, we can go as far as adding another step and saying, can someone else claim this person as a dependent? All right, so let's move on. Child tax credit phase out. And this is how I'm going to end this part of the cast. The phase out amount starts at $200,000 for single payers. What does that mean? If you make $200,000, then the credit will start phasing out, and you'll soon, the more you make, you'll soon will disappear, right? You won't get this credit. And for married filing jointly couples, it starts at $400,000. So if you're nowhere near those numbers, then don't worry about it, right? You will receive this credit in one of the two forms, either as a refundable credit or as a non-refundable credit. So phase out amount, don't worry about it if you're not anywhere the $200,000 or the $400,000, but it's good to know. Typically, people who are making $200,000, $400,000, they're not worrying about credits. But it's it's something good that you should know. All right, so now let me show you this. I'm going to show you how to enter the information in the system. Look, I've already have a tax return here that has a dependent, a few dependents. So what I'm going to do is I'm going to add a new dependent. I want you to see how it works, right? I want you to see all you have to do. Let's say that this kid's name is Marcos Hofer, and his social security is 647794669, and his social security is valid for employment. His date of birth is 01/01/2016, and the relationship is my son. Dependent, live with me for 12 months, live with me in my house for 12 months. Do I pay for 50% of the living expenses? Yes, I pay for more than 50%. Is the dependent a citizen or a resident alien? Yes, he is. Only you know these answers. Select all that apply. Am I or Josh the step parent for this child? No. Can someone else claim this child? No. I have qualified dependent care expenses for this child. You know what? I don't. And let's click done. And that's it. You can see here, Marcos is a qualifying dependent of mine. And that's all you have to do. So I'm going to end the cast here. I don't want this to be a super long broadcast, but you should pay a lot of attention when whether you're doing it yourself or you're paying someone. You need to be asking questions. You need to be you need to ensure that you are knowledgeable of what's happening. Don't just take the money and go spend it, because if something happens, something goes wrong, whether it is a mistake or it is fraud, you are liable for it. We'll see you next time.